Welcome back, everybody. Can we get a audio check in the chat to confirm the audio is good? Should be looking at the US 100 here on the screen. Just want to check that everything is good. Link should be good. Posted that yesterday. Give some time for everybody just to get on here and to join in. Let me just check the stream here. All right, everything does look good. Looks like we are good to go. Set to go here. We could get that analysis going here. All right. So let's look at the charts here. It's almost 8:30 here. So we traded down below this low here. I expected some form of a retrace back into this gap here on the daily chart. Just gonna do a quick little analysis, then we can look at the 8:30 opening. We have no news, nothing news wise here that is going to be exciting here today. We only have the 10-year bond auction at 1 p.m. That is this afternoon, which we're not going to be streaming that one. There's nothing high impact here. This is daily gap. Daily gap here. Just look at this gap here. Dollar is retracing as well. Retracing as well into this fair value gap. We're going to get to dollar in a moment. Just want to have a look and see how the 8:30 trades here and see what we have on lower time frames. What we have over here. So nothing much to see on a 15. We have been holding this level here, trading above that level into this gap here. We have relative equal highs here, equal lows, relative equal lows. Old low here, relative equal lows here, relative equal lows here, traded into a gap. We do, however, have relative equal highs as well here. So very, very cautious environment to be in. We do have relative equal highs there and there. We have relative equal lows here. Cautious market to be in. We have been really, really trading a lot of range so far this week. So you really have to be careful when you do get into something to really scale back on the risk, because these markets could move a lot really fast, really quickly. Looking at a 4 hour here, we have this consolidation here. Old high there, old low here. Put it into this wick, held the wick. That was yesterday. Put it up higher. Did go above these equal highs here into the gap. Consequent encroachment of this gap. Basically, we're sitting here. So nothing yet. Nothing yet here. Same thing on just having a glance at the, let's go down to the 1 minute. It's 8:30 here. Let's see what they do. We're looking at the 1 minute. We're in this consolidation here. We're sitting at this low since 8. Fair gap here. Could be a buy model up into these relative equal highs here. They look pretty clean. They look relatively clean there. Those equal highs. Traded into this. We did clear out these equal lows here. Took those out. Take note of that. 5-minute equal lows. Hold on. 5-minute equal lows taken out. That's going to be a 5-minute equal high. Let's just take note of that. 5-minute equal high up there. Just look at these lows here we talked about. They still are relative equal lows. And look at how clean that is as well down there. Look at how clean this is. It's way too clean down here. Even though we did take out that, this is really clean as well. Equal low. I'm going to make this blue so that we know the lows are blue and the highs are red. I'm looking at this structure and I believe that we're going to trade up into this high here. I'm just looking for a PD array we can use here. Something that we can use as a reason to go higher. We do have this order block here. I'm going to make the order block green. That's going to be a 5-minute order block. Get the color going. Let's just get that green. Go down into a 1 minute. So we're inside that 5-minute order block. Low, high, lower, low, breaker block. We do have a inversion here as well. We have that inversion. Orange. And we have a breaker block here. Gonna make that in purple. Breaker. And this is going to be the inversion here. So as long as that 5-minute order block holds, we took out these lows. We have structure in place, low, high, lower, low. We have a inversion here. We traded into this down candle, held price. We traded up through this structure, immediately came back into that breaker block, tapped it over here. Generally, this is not what I would be looking for. I would like to see a move up through and then have it come back into this. So I would be that guy that would sit and wait to see if it wants to come back here. If it wants to run higher off of that, then I would miss that move. Let's see how the risk would look like if we got involved in this position. If we were to, we have that breaker block. We have inversion. We could use these down candles as an order block or that one. I'm going to just use this one here. So that would be like a 9% here. And targeting 5 handles, 12%. That would be 5 handles. That would coincide with this high here as well as that one would be which if it does come back into that, that would be a nice area to take a partial. And then if you're holding it through, then you're gonna move stops into profits and then hold for the high, which the high would be 25%. That's roughly just more than 10 handles here. Seems like we have a fair value gap here. And it seems like we traded into that. Mean threshold, it's rallying off higher. So it doesn't look like it's going to trade back down into the structure. It traded above that breaker block there. and we are pushing up higher. So we have this breaker block here. We also have this low, high, lower, low here, that structure there, which would overlap with that. So this one is a more messy breaker block. It's not the cleanest breaker block. It's not really typically, it's not 100% ideal, but that is going to be another breaker block with a fair value gap with a inversion here. So that could have been another valid entry point, having your entry here. And obviously you have fair value gap breaker block. Your stop's going to have to now move down into here. So let's just say we get involved with that right now, just for tape reading this, because we did trade into that breaker block, fair value gap here. It rejected that. Look how beautiful it's sitting on that level. Just see if it's gonna run up here. Let's look at the parameters. So about 15% up here. So just roughly about probably 7 handles or so here. So just really snap that, miss that initial entry down there, which that's just gonna happen sometimes where price is messy like this. Snapping that entry. So let's write it up into this high here. That'd be a scenario to tape read. So far for the directional bias, we have just been pushing up higher because we took out that low on the daily. Seasonal tendencies are still bearish, bearish sideways. So it's something to keep in mind over here. Gotta be cautious of that. And we also have to be cautious and aware of the fact that we have an equal low below us. So try to not go for too much here, just because we do have those equal lows sitting below us, and they could, ideally I would like to see them take out this high, and then we could look for a scenario to take us down lower here. And that is if there is a willingness to go down lower. So this is a scenario where I would like to probably apply some type of a higher time frame fair value gap, like as for example, this, I would like to see this get inverted, and then if we can stay above that, then that would indicate higher prices. So once we trade through that high, I would look for something like this, and I would look to see if we can stay above that or if we can trade below that and use that as an inversion to send us lower. And then that would be the base that I would then use to see if I can get some type of an entry to go short once we eventually do end up trading higher. So what I would do here, risky markets, we have equal highs and lows on both sides. It's not the highest probability. Equal highs and lows both sides does indicate a low probability scenario. So I would bring that stop in. Bring that stop in, pull that risk. If they stop you out on this, then you were well aware of the fact that we do have a 50-50. So you'd rather take that small stop, even if that might be a it just wicking down or doing something crazy and taking out, and then rallying higher. It's just not worth the risk. It's not an A plus setup where you have a clear one-sided directional bias. If you guys did watch the video of yesterday, then looking at that checklist, then something here would be that price would not have a 100% clear draw on liquidity because we have equal highs and equal lows. Equal lows. So that would be one factor there that might, for you, it might be a no, might be a pass on that trade for you guys. Which If that's one of your rules, then that is you stick to that rule. Ideally, here I would want to wait for them to take one side, and once it has taken one side, and we have a clear one-sided market with a clear draw on liquidity, then I would look to go for the lows if we do take the highs. Let's see how this candle rejects here. Because we're gonna go back to that initial where we took an entry at, where the entry should have been down here somewhere, which I missed that, and then saw that we had another breaker block with this fair value gap. That's a nice rejection, trading into that order block here. So far, that is what I want to see. It's high resistance liquidity run very clearly because we are not moving anywhere super fast. We are moving slowly here. Generally, I don't like to see them come back into it again once we have wicked it like that. Like to see it trade into that, reject that, and be off to the races. We are moving into the 840 here, so that would be the end of this macro. Next macro would be 850, which generally I really don't look at that one. So this is a good reaction here. We tapped the high, moving off higher, which would this would also correspond with this 1 minute fair value gap here. Correspond with this inversion here. Would overlap that higher time frame. This is where you use higher time frame levels, and you can see where they will come back, trade into them, or pause. So far it's looking really good here. At this point, since we're right almost at the target, we have an equal high where the entry was. It's just about 5 handles here now. Just about. So I would probably say if you have multiples on, then this would be where you would take a partial at and take that stop into a profit. If it comes back, stops you out, then at least you already have one banked, and then you're not going to be losing anything. We will get into analyzing dollar and the other markets in a sec. Just see how this plays out here. Then we can look into that. So far, this is still high resistance here. Not very clean. I would be looking at, look at this candle here. This candle embodies this one. So just look at this one. Look at this as an order block. Look to see if we get any respect here. So far, none. Look at mean threshold. Okay, we tapped into the open of this candle now. So look at mean threshold. Look at the open of that candle there. If it does want to, and I wouldn't want to see this, but if it wants to go back into this wick, you could look at consequent encroachment of that wick. I don't want to really see that. I want to see it move up away from that now. That would be ideal. We also have a fair value gap there. Look at that fair value gap. It's great to use that as a filter. Let me just change these colors here. I'm going to get you guys all confused to red. All the 1 minute stuff is in orange here. Okay, so I don't like to see that. We just lost that fair value gap. We lost that order block. If we lose this inversion, that's 3 PD arrays. We can still keep the fair value gap, but we did lose that order block. Unless we wick and we close on a wick here. Even if you do take that stop out on that one, I would still manage it like that. Take that partial if you're able to. See, if we get it close like this and we can stay above that order block, that would be ideal. See, you notice that we did not trade back into that wick consequent encroachment. Ideal. Again, if we trade into the high, that's okay. I will tolerate that, but I don't want to see it go all the way back down into this really because we already traded into that area. Ideally, I want to stay above that order block here. It'll still be valid because we closed above that. Really now I want to see that run straight up higher now. Don't want to see that trade down lower. Again, we can trade into the consequent encroachment of this wick. Not ideal. Not what you would want to see here. Any close below this inversion would be, I'm out of there. That would be 3 PD arrays. Fair value gap, order block, and inversion. So that would be 3 PD arrays. The stop would then have done its job to get you out of that position without taking a loss. We're still aiming for these highs. So that's not ideal. Don't want to see a candle body close like that. Not looking very good. Seems like US 500 has been trading down lower as well. US 30 is one sloppy sideways mess trading upward. And dollar index is trading along with the indices. So not ideal here. That's definitely going to be a stop out. So at that point in time, it's just going to take you out in profit anyway, because you would be in a profit there. So that would take you out. We can look for something once. If it does want to go above this high here, we can look for a potential setup to take down lower. Okay, good. So that's the reaction that I want to see here in this level. It's at this wick. Has to go up higher now, though. Has to go through this fair value gap. I don't want to see resistance. I would start applying a time filter if just make that pinkish so we can have a definition between the order block fair value gap here. So far, that looks good. It might have, if this was a live trade with the stop inside of a profit, then it might have just tagged that stop. Probably would have taken you out. You would still have taken one handle home. Your 5 handles home on that position. So that would not be bad. Okay, I want to see that close above this. There we go. We have this order block now. So I don't want to see anything ideally below that wick again. I don't want to see anything go below here. We traded that multiple times now. Order block, that is tolerable. I want to get it close above this order block. I'm looking at the body here. So that's not ideal. That's not what I want to see here. We could trade into the mean threshold, though not ideal to trade back into this inversion here. Want to see a candle close higher. Good morning, Arcos. It's a pleasure, buddy. You're looking for shorts today. Yeah, shorts. That'd be a great. It'll be fantastic if we can get above these equal highs and we can get one sided, and we can trade. We have these equal lows sitting right there. That'd be wonderful if we can get that idea going. I mean, we rallied up here since Monday. We've rallied up a lot. Look at that, about 5%, which that is insane. We rallied up a lot, sat inside this consolidation. We mainly rallied up here because we had 3 large range days down lower. We took out this old daily low, so that sets the stage for retracements for us to trade back higher. So that was expected. ICT says after 3 bold candles in one direction, you can expect a retracement before price continues to rally. So in this case, we might expect price to, since we're trading into that daily, where's that now? That daily gap. Let's bring that into view here. Let's see where that is. Where's that daily gap here? Let's bring that into view because that's going to give us extra insight. That'll be the stop there on that position. So 5 handles comes back, takes you out. 5 handles is nothing to feel sad about, nothing to feel shy about. 5 handles is 5 handles, and if that is all that you catch, then you can make a nice living off of 5 handles. I'm gonna get rid of. Actually, I'm gonna clean this up here. Yeah. So that would be stop. That would be the stop doing its job. 3 PD arrays would have been invalidated. We had that privilege gap. We had this order block. We also had this order block. We had that wick. So that will be it doing its job here. Did trade back into this breaker block and fair value gap. Rejected that. I still want to see it take out this high here. I wouldn't want to go short on this if we haven't cleared one side. I mean, looking at it yesterday, it was really, really bullish. And you don't want to be fighting this thing. You don't want to be forcing a direction on this thing. You want to wait and see. Use a filter like this 5 minute inversion it's a wonderful filter. Price stays above that, then we're gonna go for the high. If we go below this inversion, then price is likely gonna tank. I just wouldn't get involved with it unless we clean out some form of a high or some form of a low so that we get one-sidedness. I'm waiting for one-sidedness because one-sidedness gives us high probability conditions. So that's what I'm waiting for. I'm waiting for one-sidedness. So I couldn't care less what it's doing right now. If it's going to take out highs or lows, one side needs to be cleared. So it's going to sit inside this inversion, it looks like. Trade it back into this wick. Let's get this off of here. That will be stopped out unless you took that entry down here, which initially I was looking at this breaker block here. And then we had this, I saw that we had a second one, which we tapped into that, rejected that. Look at how beautiful, by the way, it tapped into that consequent encroachment, that fair value gap here. If I take this breaker block candle here, the last up candle extended through, the same thing can be seen. So that is where I personally think that model, that'll be a nice little model, that consequent encroachment model. Now, unless you took this entry down here, which even then I would still have had my stop at inside of a profit because I would not want to see it come back down into this because it's going to come down and take you out on a stop anyways. Another thing is that even if it comes down here and it rejects this structure, this breaker block with the fair value gap, and let's say I was stopped out like I was up here, I still wouldn't retake that entry point. I would wait for it to then take the high and give me a new setup. I wouldn't re-enter off of that structure. Usually when it does that, then it tends to trade through that and it's going to hit your stop anyways. So that's why I wouldn't take a re-entry on that structure. Okay, so we are below the 5-minute inversion. We are sitting inside of a consolidation on a higher time frame. We're sitting inside of a consolidation in this area here. So you got the high, you have this low here. I'm going to mark this out, all low. Make the lows in blue, so don't worry about it. Just say all low. That is a 15-minute low. 15-minute old low here. So we're sitting inside of this consolidation here, low to high. We're sitting inside of this. So until one side gets cleared, there is nothing to do here right now because we are sitting inside of a range. Take a fib. Take a fib. You can pull the fib from this high to this low. %. So that is not a good place to be taking anything in. You want to be looking for something in a premium or something in a discount. Trading in the middle of the range is low probability and you're going to get chewed up. That's the easiest way to get chewed up. Arcos, I usually trade the 8:30, 9:30 as I look for those macros. If not one of those, then I look for the 9:50. And if I really don't find anything on those, then the latest that I would sit down would be from 10 to 11, the silver bullet, and that would be it. Then I would, if I don't find anything in there, then that would be a day for me here. Notice that we traded into this lower breaker block now here, right? We did not trade into that as yet. So that's a clean level. So let's watch and let's see if this is going to push this up higher. So let's just tape read that and see how that's going to work out for us here. Let's tape read that because a lot of time that is something that I just don't like with this thing having two how can I say this, having two entry patterns here. I don't like that. Again, it comes back to I like to see a clean structure, see high probability. As far as strict entry functions, I've given you some of that on the how to set up the Notion template, and I posted a video yesterday on the how to trade ICT's consequent encroachment and mean threshold on the order block, the breaker block, and the inversion. If you go look at those videos and you look at the checklists that I posted there, those are some of the checklist points that I look for when I take a trade. But yes, I do have strict points that I do look for when I look at a potential setup. I have things ranging from the hard time frame that I have to look for, and I have a few things that I look for on the lower time frames as well before I pull the trigger. Again, I posted some of those things on those two videos. So go watch those two videos, and I give you a couple of pointers in there. And with time and experience, then you can just add some more things onto that. You have to go dig into it, and you will know which checkpoints to look for when you start your back testing and stuff. you will, when you're working on your model, it'll start coming to light certain things that you like to see price do this, or you like to see price do something else. There's going to be things that you like, there's things that you're not going to like, and those are going to form the base to your checklist. Things that you're going to add to the checklist, things you're going to take off. Like ICT talks about, when you take a trade, like you would journal when you got into that position. How long did it take to hit your partial? How long did it take to get to the target? Those are things that you might want to journal for your particular model. And if you're going to do that, then you're going to start to see a pattern of how long a setup is usually going to take from the time that you got in, how long it's going to take to rally to the target. And you're going to see a pattern when you start to look at that data. And that is also something else that you know from experience, that when you take a position and you know how long it's more or less going to be until price rallies and hit your take profit, if that is a good solid position. If price starts hanging around and it starts giving you high resistance liquidity runs, then just from experience, you know that this model is supposed to pan out in a certain amount of minutes or time. Then you know that it turns into a lower probability setup, and that's when you start applying the time filter, or you look to take something off, or you look to tighten up the stop. It's really about the experience and journaling this stuff and just doing it over and over and over again, collecting the data and looking at those, and that's where you're gonna build your model. Again, my specific model and the checkpoints that I look for, it's not gonna be the same stuff that you guys might be looking for, because all of us look at the market. We approach the market in different ways. So you might be looking at it differently. You might be trading a different PD array than I am. You might be looking at order blocks, taking entries off of those. So it really varies. And again, it comes into all of the things that you studied. It really comes down to a lot of things. I mean, I went through the ICT's core content, and I went through the 2022, the 2023 mentorships, and I watched his charter content. So I've got a lot of stuff that I think about when I'm looking at the charts, and it's a lot of information that I might not always be specifically saying, okay, you got to go look at this specific video to understand that, to look at it this way. So there's a lot of things coming together when you look at this stuff. When you've studied so many things and you've taken parts of that stuff and you've put that stuff into your model, and I've taken some of those things, I've made them my own, and I apply them different than ICT is going to apply them, right? So not going to look at it exactly the same way that he's going to look at it. So you're going to take the things and you're going to apply things in a different way than I'm going to apply them. So it's difficult to just give all give all these things in just one video and make you understand. It's really, you got to go in, you got to study it, In the beginning, you're going to be confused. You're going to feel like you're thrown into the deep end, and you're not going to be sure of where to start, of what you should be focusing on. You just start at one point and you work your way through. Like ICT says, the 2022 is a great way place to start, because he gives you a PDA rate that you look at the fair value gap, and he focuses on equal highs, equal lows. He teaches you how to do directional bias on the higher time frame. So there's many things that come together here. Many things come together. See, this is not looking good here. We're already at 906. I don't like the fact that we're just range bound right now. Nothing going on here. Just sitting range bound. I think we can take a look at the rest of the pairs here. Arcos. I am currently experiencing with the daily 1 minute unicorn entry at 9:30 a.m. You found great results with the 15-minute strict draw on equal. You know what, Arcos, that is, you are onto something great right there. Just by looking at the daily 15-1, working your way down through the higher time frames. 9:30, that's a great time element to focus on, and looking for equal highs, equal lows on the 15. That is fantastic to get a session liquidity or a draw for a scalp. Looking at market maker X models, that's wonderful that you couple that in. Also using daily bias, external to internal liquidity. That is wonderful. You have a fantastic base. Just go in and find some things that you're looking for on a daily and start noting those down on your checklist. Note down a couple of things from the 15. And then on the 1 minute is basically going to be, you're going to look at, you can just look at you can look at the 2022 mentorship. Okay. ICT gives you all of the checkpoints. He gives you the foundation, the base foundation. And that is, I took those points and that's where I got those. You want to see the fair value gap, you want to see an impulse move, you want to see the stops taken. You can just take those, and that is what you would be looking for your entry on the 1 minute. You're onto the right path there. It'll most definitely be a pretty good model. We're still hanging around here, not really moving anywhere here. We have an inversion here. Pull that through. Still sitting at this breaker. Still inside this range. So notice how we are sitting inside of high resistance liquidity run. And then one last thing, Arcos, if I can give you a last piece of advice, then focus on one PD array. form a model around one PD array, whether that's going to be the fair value gap, or maybe a breaker block, or an order block, or inversion, whatever it might be, whatever your eye is drawn into. Focus on one thing. Don't focus on multiple ones. Focus on one and get profitable using the one PD array. At a later stage in your development, you can go back and then you can start testing and journaling with a second PD array. And then you can work your way up with that one to profitability as well. But first, start off with one. You can make more than enough money just using one. You don't have to necessarily do more than one PD array. Be good at one first. I love the breaker block. Breaker block coupled with a fair value gap and a order block. I like to see three things. I like to see those three things line up. They don't always line up, but I generally like to see that. That's a good base. That should take you pretty far. Tapping into the inversion. Let's get rid of that. Okay, well, this is going on. I do want to take a look at the dollar. Just follow along on your screen. Take a look at the dollar. Let me clean this up here. Just give me a second to clean this stuff up. Quickly get an analysis going of dollar index here. Weekly fair value gap. Let's get rid of this 4-hour inversion. Let me see here. Tap that low. Weekly. Is that a weekly? Let me see if that is a weekly. Okay, that is a weekly fair value gap. Just looking at these time frames as well here, monthly. All looks in line with that fact. That's another thing. We also took out this low as a monthly low, so you could expect retracements. Just see on a daily, yeah, we have this fair value gap here. So that is the retrace that you would expect to trade up into this fair value gap. Pull that back. So you notice that we have an equal high here as well here. Those two candles right there. Relatively equal, so that'll be a 4-hour relative equal high on dollar index. I'm gonna leave it blue. We also have relative equal lows down there. So that's something else that I'm looking at here. Let's gonna make this one red. Relative equal lows. We do have this fair value gap here. Also have an order block here. I think I'll opt to, to note the order block just because we are sitting in this consolidation here. I also noticed that we did go above that high with one or so ticks. We did go above that high. So it is something to note that we did trade above that high into this fair value gap. My focus goes into this fair value gap, the inefficiency. If we trade into this inefficiency, then we have to see what price from there, if it's gonna want to go down to this relative equal low, or if it's gonna want to go up and clear these now relative equal highs. It could still want to do that. We trade into this fair value gap here on the 4 hour with the order block. So this is another point here that it's wonderful that we have this structure in price right now, where we have the order block and we have this daily fair value gap above us, and they are so sandwiched, so close to one another. And essentially we are just stuck between two PD arrays right now. We're trading into the order block and we're trading into the daily fair value gap, and we are just stuck inside of a consolidation on a lower time frame. And to me, that is, when I see something like this, then okay, I'm expecting a market that's going to be high resistance liquidity run, and it's most likely gonna sit sideways. It's going to be moving up and down, not really going anywhere. So it's stuck between two PD arrays. Ideally, you want to wait until price gets through one of these PD arrays. You want to wait until price really trades into this daily fair value gap above us, or until price really trades through this daily order block here, so that you can get back to that one-sidedness. You're always looking for one-sidedness. If you're finding ideas that give you these conditions where I could see both directions of the marketplace, that is low probability. So that makes it more complicated to trade, because you're going to get ideas on both sides. And if you do not have a clear high time frame directional bias, that really tanks your probabilities, because now you're going to start to look at intraday scalping. So you're going to be looking at 15-minute, 1 hour relative equal highs, relative equal lows, and you're going to look for one side that's cleaner than the other, and you're going to focus on trading on that side, taking something in line with that idea, keeping in mind that you are on inside of a daily consolidation. So you're going to have to look at scalping. You're not going to be look at holding too long onto a position. So that is what I find salient here on the 4 hour. Oh, a daily order block. 4 hour order block. It's not a daily order block. Sorry about that. 1 hour. I just like to work through everything and just get a view. Sometimes I find something on a 1 hour chart that's salient. Like for instance, these relative equal highs. I would probably note those. Just make them blue. Keeps it simple. Knows it's a high. We also have this 1 hour fair value gap. Not gonna note that because we're sitting inside of that 4 hour order block. It just cleans up the chart a little bit not to mark that, but in the back of my mind, I know that we are sitting inside of that as well, even though it's not noted. Then moving down into a 15, you see that we have this equal low here, which is way too clean, guys. This is way too clean. It almost looks like a market maker sell model. Looking at a market maker model. Then zooming it out, we had that market maker buy model here going up to this, clearing that high. This would be a classic bull flag pattern, right? Retail, this would be like a flag pole here, and then this would just be price encapsulated. So retail would expect price to give a leg up higher, right? It's been rallying up higher. They expect price to trade up higher with the distance of the flag pole up higher. So they would expect this to go up higher. So with that idea, that's something else that you could utilize So retail is going to expect higher prices on dollar. As smart money, we know that price is not going to give them that higher leg. Price is going to take it out, go to these relative equal lows here, and take those guys out. So I kind of like that idea of this coming to fruition here. And also notice that retail would be looking at this. They would be looking at this sideways. We're sitting in that flag, bull flag here. So that's what I'm looking at. So this is a consolidation. We are sitting in this high to low. We're sitting inside that range. Fib. We're sitting right below the discount, right below the premium, right below 50%. Something to note when you are in ranges. Look where you are in the range. Low probability. You need to wait. We need to wait to get into an extreme of this range. And then we do have a high there as well as relative equal highs here. Too clean. And we have all lows sitting below us. These highs are just too clean. Notice we traded into these order block held price that is in line with the 4-hour order block. Pushed it up here. Still left a relative equal high in place. We do have a fair value gap here. Could trade into that. Could push it through the high. Could also send it through to the low though. Look at a 1 minute. It's just way too clean up here for now. Way too clean. I wouldn't touch it, to be honest. I would not look at anything until these guys start cleaning things up across the board. See that? Traded even lower here. Back into this inversion here. So it's just sideways at the moment. Nothing interesting going on. Could just extend these levels. They might want to go for this high at 9:30. But as things are standing currently, I personally would not take an entry to get up into this. Nothing breaker wise, at least. Just because we have this really messy structure that's in place and we still have price in a 50-50. So it could just go either way. Sometimes 9:30 opens up, especially when we have some high impact news event and price just really it would run for this high in a matter of like 2 minutes. It's going to go and take out that high. So unless you have a solid clean base setup where you know for sure it's one-sided, it's going to go up there, it's just not worth it to take that risk. Trade it into this inversion here. Let me just note that. Inversion plus breaker block. We have order block here. I'm not noting every single order block and every single fair value gap. I know they're there. That would just make the charts way too messy. Just extend this through. Look at this higher time frame, that daily gap. We're right at consequent encroachment of this daily gap here. Just check that. Look at it again. See that? We're right inside of this gap here. We're sitting inside of that. Consequent encroachment, midway point of this gap. Sitting inside of consolidation. Okay, let's go into the US 500. Let's get an analysis going on to this. You should be looking at US 500. Look at it daily. So we basically have that same thing going on where we traded that low. I'm going to note that in, let me see. What did I note that in? In blue. Okay. We're going to note this in blue. Not going to worry too much about analyzing these pairs. Let's see here. Just want to get a general idea of where we are moving and what we're doing here. So that same daily gap, pull that through, daily gap. Daily gap. Let's work down to a 4-hour chart. Just clean these levels up a bit. Here we had, I wouldn't say that's a break block off the bat here. Maybe on a lower time frame it might be. We had this order block here though. 4-hour order block. 928. Let's just go back to the US 100 for a second. You can just follow along on your screen. You'll see we are rallying higher towards that equal high now. So this consequent encroachment level lined up with this 5-minute inversion. And that break block, that will be validated there. But nothing to get involved with to go long. Like I said, I don't think it's gonna give us anything clean to go long at 9:30. It's just gonna clear the board up, give us that Judas swing, and then once it gets above there, then we can then I would look for a filter for something like a gap on the 5 or 15, and then if we can trade below that, like for instance this gap over here, I would just pull that through, and if we can trade below that, then that would set the stage for some shorts. I would utilize something from a higher time frame. It could even be an order block or whatever you like to see, or whatever, depending on what is in play. It's really what you feel comfortable with, honestly. It's really gonna depend. Okay, you guys can just follow along with that one on your own screen and see if we take that high out. Continue on to the analysis here. I can see that US 30 is tanking on a 1 minute. That is just tanking down lower. I can actually show that to you right now. That is tanking now lower. We have, okay, US 100 did take out that equal high. So indices are out of sync with NAS wanting to go higher and US 30 tanking. So dollar index is still sitting in a sideways consolidation, trading higher. US 500 is now following suit. NAS, of course, is trading up higher. I want to see something around the 950. I would expect 950 to clean it up. If there is a clean structure in play, then that would now set the stage for us to trade into that equal low the on the NAS essentially. Unless they want to go higher, of course. And then that would be where you would use a higher time frame PD array, like a fair value gap. And if we stay above that gap, then you would still be looking for longs. Don't try to don't force your bias on it. Just put a fair value gap in or mark up an order block. If we go below that order block, we're looking for lower prices. If we invalidate it, if we respect the order block and trade higher, then obviously you would be looking for higher prices. And that's a good technique to just to filter. Dollar index is now dropping down lower. US 500, as you can see, is going up higher, and same with US 100 here. Let's get back to that analysis here. Daily gap, 4 hour. Okay, we didn't have this. Okay, I was looking at this 4 hour order block down here though. Could also look at this one though. It traded into the mean threshold of that as well, so that would also be valid. Look at that instead. Order block mean threshold. 1 hour. 1 hour has a nice fair value gap here. Nice inversion that we have there. I'll take note of it anyways. Gonna mess up the chart, but whatever. So there's that. Just looking at these lows as well now while I am in here. We still have this high in place here, which could be something they might want to take out. And then we did take out that high. Looking down at a 15. Again, a fair value gap down there. You could pull through if you want to. We also have this fair value gap here. This inversion here. And we are sitting inside of that. So this would be like the filter that I would be looking at. So that is definitely one that I will extend through. That 15-minute, yeah, inversion. We did trade above it there, so that would be classified as an inversion. There's the 5 minute. You have an order block there, order block here, traded into that, respect to that order block here. You would expect that to be respected, seen it above the high, which we did. We do still have this high in place here to complete this market maker buy model. Still have to take out this relative equal high. So they could still reach for this consequent encroachment if they wanted to. But that is essentially US 500 analyzed. If we are to trade a lower in this one, we have a target down here. We have relative equal lows there and relative equal lows here, which we would use those as our targets if we trade down there into them. Let's look at the US 30. By the way, on US 100, we did trade into a fair value gap at 930. We traded it down. We had a fair value gap at 930. Take that fair value gap, extend that fair value gap to the right. We traded into it 933. And let's see if it wants to hold it and push it up higher a little bit more. Okay, let's start on the 4 hour here. Doo, doo, doo. Our fairly gap daily order block. Those are not salient to us anymore. On a weekly, we do have a fairly gap here on a weekly though. Really big daily. We have that same daily gap here. Whoa. Daily gap. The gap is just the obvious point to trade into. So that's why I'm noting the gap. Strangely enough, we've not yet traded into the gap on US 30. US 30 just lately has been all over the place, really messy, not clean at all. So it seems like on if you're following along on the US 100, that 930 fair value gap is so far still respecting us and trading higher here. It's not yet clear at the high yet though. So US 30, this would be a valid order block. I might look at the mean threshold of this. This order block here. We also have this one here. We just barely did not trade into this one here. Quite interesting. Gonna take note of this one here. Let's see, 4 hour order block because we're hanging right at this open price. We're hanging right at this price. Could note this. Well, let me just note this lower one as well. Could note that high. Could look at the wick. Now that we are on the okay, there's the high cleared with that fair value gap. If you followed along, I'll switch over to that in a moment here once we're finished with this analysis here. Then I'll swipe over to that and we can just look at that. Just want to get this done first. So that wick would be something that I would probably take note of and look at this consequent encroachment wick. Since it's so close here, I do want to look at the fib. Okay, hi, there we go. I got it. I'm spot on. Spot on. So that is 1 hour wick consequent encroachment. Red. So you won't miss that level. I like this low here, coupled with this 4 hour order block. I like that. Coupled with this fair value gap, pull it through, it becomes a balanced price range. I like that area in price. So that's 1 hour low. I'm making that light blue. Still have those highs too above us. This is really, really messy price action here. Really messy. Just shows that we're sitting inside this range here. Relative, this now has relative equal lows there. We had the highs, failed to trade through the consequent encouragement of that high, that wick. Traded into this up candle here. Failed to go above that. Look at the candle bodies. Candle bodies closed lower. Traded into that order block. Might be noteworthy. just to have this on the chart. Everything is dollar is trading higher, US 100 is trading higher, so it's out of sync. Not the best market. 5 minute, and then if I look at the 5 minute, these lows are coming in come into my scope as well as these lows. Especially with dollar trading higher, the US 30 likes to just oppose dollar and trade out lower. But I do not trade the US 30 though. For our order block, gotta pull that through. So we're just hanging around that level. Anyway, so there you go. There's that analysis there. There we go. Did I not talk about that consequent encroachment in this high? Well, there you go. There you have that. So that's good. Things are starting to clean up. 15 minutes. Let's just mark it anyway. Old high so that we know old high is in place. That's good. I wanted to see that happen. 37 got the high. 930 traded into this inversion here. Inversion. Wouldn't look at this as a clean breaker block. I would look at that inversion here or order block. Traded into it, pushed it off higher. Traded into that wick. Higher she went. Let's go back to the NAS. Let me pull this up here. Okay. So I was talking about this 930 fair value gap. Pull it through. Look at the 933. We traded into that. Look at how it traded, tapped the consequent encroachment, closed above that. Tapped it one more time, traded through the high. 29%. It's not bad. We are still, well, we're not in as bad ranges as we were on Monday. Just want to see if US 30. US 30 is trading higher as well now. Dollar is trading higher. What I would ideally like to start to see now is what I talked about this early this morning in the stream, where I'm going to see prices start to trade lower. I would like to see a formation appear to go down lower. Get this stuff out of the way here. We can clean this up. No need to have all this on the charts. That equal high there still. We still have relative equal highs above here and here as well. If it does want to go up. If it wants to go up even higher. To trade into this one more time. Let's see over here. We still have relative equal highs and equal highs here above us if it wants to continue rallying up higher. I'll take note of them. Relative equal highs. Relative equal highs. Get them extended through. Make them red. Just want to see if we do not have. Yeah, that will be the next target. 5 minute. Let me see. Yeah, I would be looking at those. Way too clean. If it wants to continue going higher, that's where it's gonna go into. Let's get this thing centered. Since we're above this daily gap as well, the high of this gap could also be used to push this thing higher. You see the candles are wicking to this here. Also have an order block. So as long as it's showing a willingness to continue going higher, then you're not gonna fight that. You're just gonna keep riding along with it. You would still have. Let's see how much meat on the bone we still have. We still have 30% on the bone. So there's still enough to carve out something. Take note that dollar traded its 15-minute relative equal high. Something to keep in mind. We still have highs above us. So this might be, it might end up setting the stage for these guys to start going down. Look at that though. Let's look at this order block, see if we can see if that wants to push it off higher here. We have this order block. We have the high of the daily gap. And we have a fair value gap here. Let's just see though. Let's see. Let's see. 947. So I would wait for 950. Let's see though. See what the stop would be like if something like this was to be taken. Not too bad. We did trade into this gap. We traded into it there again. I wouldn't want to see it trade into it again. To be honest, you probably would take a position on that. Have the stop. And let's look. Above that high would be a partial. For sure, that would be about 7 handles or so. And then you would look at the high. That would be 0.36. So that is a good 1 to 1.5. That's how I would take that position. Your first take profit would almost be hit. 5 handles, you would already have 5 handles in the bag with 14%. Just take them off right there. No need to be greedy and wait until we clear the high. If you get 5 handles, take them. Stop would have to be down there, at least until we can close above the high. Unless you took a partial, then you do have the option of pulling the stop back down. That's how I would manage that position if I was in that position. Order block, string of up candles, that would be an order block. Still a great place to take a partial at. Take 5 handles off. No need to wait for it to clear the high. Just grab the 5 handles. They were given to you. Graciously take them. No need to be get above the high. So there would be take profit of that. Then you would be looking for this. Stop would be in a profit. US 500 is trading along here. US 30 is in a sideways consolidation, and dollar index is trading along with us. So not ideal. Not ideally what you would want to see here. Nonetheless, we look at the from this high up to this area here, 50% would be here. That's about 27%. So that's about 10 handles almost. 10 handles would be at the 20, 23 what so range. That's another great area to take a partial. Pay yourself the 10 handles, and it didn't even have to hit the target to get that 10 handles. So take your partials. Partials are good. Uh, Partials always pay. Even if it does come back, take you out, you're not losing anything. You would have made 5 handles. You would have made 10 handles if you had multiple contracts. If not, then you would take 5 handles and be done with it. Straight into that order block, I would want to see an expansion up now into the high. It's 952. Macro is now coming into play. 950, 10, 10. That's just another idea how you could manage your positions with the fib. Since 934, dollar has rallied up straight shot. Really high resistance liquidity runs here, even though we have been rallying up higher, higher, higher. We did take out this short term low here. So that's why I said I want to see this thing trade lower, but I'm not going to force the idea. If they keep on pushing it higher, then we're not going to be fighting that idea. We're still going to trade in line with that idea. So that would be you taken out of that position, but you would still have made your 5 or 10 handles. This is how you tape read this stuff, guys. You have to tape read this stuff over and over again. And that's how you learn. This is how you learn how price reacts around certain levels, certain reactions you want to see at certain times of the day. This is how you learn when exactly to take your entry after it's reacted a certain way around a certain PD array. So that's journaling for you, tape reading. Since we don't have any high impact news today as well, that would add to high resistance. But since it is a Wednesday, so day of week, Wednesday is usually Tuesday, Wednesday. Sometimes Thursdays are good trading days. So even if you do not have news, you might still be able to go in and you might still be able to scalp something out of this market if the structure is there, if something can be framed. Even if you just use a lower risk, you would still be able to capture something out of a market like this. So that idea would now be scrapped. We have this. We don't have a fair value gap yet. We got this order block here. Creating the high of this gap here. So I would still want to ideally see that go through this high. I'll mark up this order block. 15 order block. Let's look at that. Look at the 5. The 5 still has a fair value gap here. So I'm going to note this as a 5-minute fair value gap now. And keep that 15 order block. And then we can get rid of these. This one would still be valid. I'm going to get rid of those anyway. 15 order block. Get rid of this inversion here. So if it trades into this 5-minute, we could still see a rally higher. Go above this high. Go for those relative equal highs. That could still be something that we could see here. So let's tape read that idea. If you look at the US 500, you can see we have higher lows where we have a lower low here, as well as on the US 30 we are trading higher. So that would be an SMT. Dollar is rallying down, fuel on the fire. This wants to go up higher. So that'd be a good idea to look at. Look at this going higher. That'd be the idea here. Still very messy here. This could very well be the high. And you could look at this as the breaker block to send that down lower. And this is where this 5-minute fair value gap. Didn't note this as a fair value gap. Could be the filter if we trade below this really impulsively. Then we could see this idea coming into play where we have that short idea, and then we could be targeting this low here with this fair value gap here, and then relative equal lows below us. That could very well happen. And that is something that you're just going to have to be conscious of when you're inside of a market that is sitting in a consolidation with relative equal highs in place and relative equal lows. By the way, we were looking for these relative equal highs, and we were looking for these equal lows here, as well as this alt low here and those lows there. So it's still 50-50 here. We rejected that again. So let's see how that would work in a long position. Let's tape read this. For the stop, I wouldn't do anything here lower than this. Got this fair value gap. Nothing else really here in close proximity that you could use here. So fair value gap, we have wick, consequent encroachment, and you could use this order block. That'd be 3 PDRs. You could use this order block. Took out these lows. So that would be 5 handles right there. 5 handles in the bank. 10 handles would be there. That's 10 handles. At that point, I would pull my stop up. You would then look for something above this high. That would be another partial point. And then ultimately, the relative equal high would be the draw here. So it does not necessarily have to trade into the high to make something here. Still inside that 950 1010 macro here. And there you go. It's really rallying towards this high here. Really nice. That's what you want to see. Really fast, explosive candles towards the target. You would expect that after this consolidation here. Dollar is rallying lower, so that's fuel on the fire. Looking good. Those are signs that you want to see that it's going to continue pushing up higher. And that's how you would manage it. Just manage it like that. Really close to the high. This is probably a good idea. Take a partial off. Take something off. Even if you take it off here or take it off there. For yourself something. Really nice rally. We can still see that price is still a really, really moving in really big ranges still here. Big stops, big range. Let's see if we can get above this high. We have this high, this high. Could be a relative equal high. If we're gonna retrace, we're gonna retrace to this fair value gap or this fair value gap here. Would be nice to see this one stay open, trade into this one, go higher. S- Still a nice place to take a partial. Still a good area to take something off. Pay yourself something. I'd like to see this stay open as a breakaway gap down here. Ideally, have that stay open. Trade into this one, clear the high, clear the equal high. That would be ideal. Low, high, lower, low, breaker block. Wouldn't see this one as confirmed yet. I like to see a impulse move above, close above the breaker block, and then trade back into that breaker block. Trade into that fair value gap. Let's see how price reacts around this fair value gap if it wants to keep pushing higher. See what reaction we get here. So if we're not looking good, looks like it wants to come back down into this lower fair value gap. Ideally, I want to see this stay open. Beautiful reaction. Want to see it really above the highs now. Have this stay open as a breakaway. That would be ideal. Beautiful close, closed on the high there. Expect to see a rally higher now. Dollar is pushing down lower. US 30 is pretty in line with the NAS. So is the US 500 here. So we did trade into this gap here. Not ideal, not what you would want to see. See if we get a reaction in this one here. We have this down candle here, which would act as an order block. By the way, if you guys are just tuning in now, then we did look at price trading into this fair value gap down here. And I took that entry right there. I took that one and we're tape reading that. And we managed to get 5 handles and we got 10 handles around this area. We took that home and then we were looking for price to get above this high here. What's that high there? And we did, of course, move the stop up. So if we were tape reading this, then you would be stopped out, but you would have taken home 5 handles as well as the 10 handles. You would have taken that all home. So that would still be a really nice position to have been in. That was a quick one as well. We notice how we had nice big candles fast. It was quick, and we easily got the 5 handles and 10 handles there. So if it trading back into this again here, I would not take that. We already traded into that here. We traded into it here again. So I wouldn't feel too comfortable taking that again there. I might be looking for something like it inverting this, retesting that, and then if I see the rejection here, then I would be feel comfortable to take that entry again to go long. Let's see if it trades above that. Let's see if it wants to tap it, give it another move higher here. We're reaching for this relative equal high on the hourly chart. Want to wait until it closes above it. Could still trade down lower in that and reject that uh, fairly gap. So you want to be careful. We did trade below that low in this one. Take note of that. You want to be careful. Keep that in mind. Let's look at the 15. Could just cycle time frames. We do have a fair value gap in here on the 15, and we did trade into that just now. We did tap into that, so that is something to be mindful of as well. So that right there is a really good rejection. If that wants to close like that and move higher, that might pose as another opportunity to tape read that. So far, it's still trading lower. Okay, we'll take that. Take that for a tape read. Stop or a block here. We have the wick consequent encroachment, or let's do the fair value gap below fair value gap consequent encroachment. Target would be 5 handles. See if we can get that 5 handles out of this guy. Let's see though. See if we can get that. It's setting in a consolidation here, so something to be mindful of. With dollar slightly pushing up a little bit now. Not going to be one of the cleanest ones to take. Might be a high resistance liquidity run. That's why I said I just don't like the fact that it came back again, traded below the lows. I wouldn't feel the most comfortable, but is what it is. It's just the nature of tape reading this stuff. So that looks good so far. Rallying, waiting for that 5 handle to run. See if we can get that 5 handle run there. So that'll be the 5 handles. 5 handles, move the stop to even. Take a partial if you can. If you can take a partial, then that would be where you would close the whole position and you would be done with. Then we would look to see if we could get 10 handles. That'd be 20, around about 22, 23%. Put it into this inversion. See if it wants to push us higher. And that is it. You're really just sitting here tape reading. You're looking at these candles. You're practicing these entries. You're noting how you feel when you take these things, how you feel managing the position. And that's how you learn. So even if it does come back, takes you out, the stop would be in profit. You already banked the 5 handles. So it doesn't matter. Even if it does want to take it out again. To close above that consequent encroachment, let's see how this candle trades here. I would want to see a push above this candle here, have it reach for this high, and then we still have this relative equal high here. We still have that in place. Look at the candle reactions. Not looking the best here. We do have a fair value gap here, slight fair value gap. Look at how the candles are trading. That's what we're doing here. Look at the reactions they get at least levels. That's the important thing. Okay, so it's trading inside this fair value gap. It's tapping this fair value gap here. We have an order block sitting there. Let's look at the reaction. Okay, it closed above. Look at the reaction. Okay, that's a good reaction. Pushing higher, I want to see it push through this fair value gap here now. Push above these highs. If it trades above those highs, even though it's not going to be the 10 handles, it could still be a partial. You pay yourself for sitting through this. It's good practice. See if it wants to just shoot up here now. We can get it to really spread its wings and get above these highs. We are at 1012. So 950, 1010, macro would be over. But still continue pushing higher. But no new entries are tolerated here. So see, that would be concerning. Not something ideally that I would like to see here. I wanted to see it really push through here. Trade higher. Most likely going to reach for this order block here. Right into the order block. Let's watch to see how this candle closes. Good reaction. See if it can close above the consequent encroachment. Close above consequent encroachment. Really has to rally higher above these highs. Not looking good. Reaching for the order block. Just watch the candle bodies here. See if we can get a higher close of this one. Okay, so reaching for that order block, and that is where it would take you out. Gonna reach for this order block. Look at the reaction at the order block. Good reaction. See if it wants to go higher. Been sitting inside this range. Want to see it go higher there. If it doesn't go higher in this one, this is where you would apply the time stop. Now, we would already be out of this position because it took us out there. Wouldn't be worried, already banked 5 handles in this one here. So we already got paid. Stop was in a profit. Fees and commissions covered. So now I want to see this rally above these highs. It's got to get above the highs. Give it a time stop, 2 minutes. If it doesn't do it in 2 minutes, then you look to get out the position. You start applying time stops. If you look at this rally here, and if you were not present when we were tape reading this, we had really quick, big candles push up higher, and we easily had 5 and 10 handles. And stop was in the even. It was in a hurry to get somewhere. This is high resistance. Not in a hurry to get anywhere. Not looking good. So these are resilient market conditions. A couple of really nice scalps could have been taken in this, especially for fair value gap traders. And we did get a couple of breaker blocks as well here. Down lower, we had this breaker block down there. We had a breaker block up here. I believe it was. And we also had one. I didn't think we had one up here. But we did have a couple of breaker blocks. We had one here. We traded into that. Rallied higher. We had another breaker block. We had this one as well here. We traded into that. Yeah, we traded into that here. We traded that here. Rallied up. Then we came down into that lower one. Here, rallied up a little bit. 5 handles stopped. And we sat through this stuff. And we had a fair value gap somewhere in here. I think we took an entry somewhere in there. We took an entry long, and we had this one as a long up, and we also did a tape read on that one there now, where we traded up higher. So it's good practice. That's how you learn this stuff. You sit down, you tape read, and you take your screenshots. You note down how you feel. You look at the reactions of the candle bodies at these levels. And that's how you learn. And you look at the price action. This is how you learn how to identify high resistance liquidity runs. You learn how to see low resistance liquidity runs. You learn how to anticipate a setup forming before it does form. So it's really good conditions. You gotta sit, you gotta practice this stuff. We had a really nice impulse move through all these lows here now. So this is that turning point where I would start looking for price to get below the fair value gap. Look at a 15. Let's see if we have a fair value gap here too. 15-minute fair value gap. It's really in line with this 5-minute. That's good. So that's where we could still utilize that level. I'm gonna get rid of this one. Get rid of that 15 order block. Let's look at that order block there. 15-minute order block. We traded into that now. Ideally, you're looking at this 5-minute fair value gap to see if this now becomes an inversion. If it does, then that would set the stage for lower prices. If it stays below that, this is the daily gap still. The daily gap, favorable gap here, favorable gap there. We have a high, low, higher, high there that act as a breaker block. Preferably, though, I would still wait to see if price is going to respect this inversion to go down lower, and then get involved in something down here to ultimately get down to this 15-minute low. I wouldn't just jump right in. I would wait for something to give me a confirmation that it wants to stay below this. To trade into that breaker block, that is something. It is something that you could take. It's inside the Fibonacci gap. It is something that you would be able to short if you really want to get in there. It's aggressive. You want to just snap it. You want to take that short, trade it the other direction. This would now we'd still have this relative equal high in place, and that's what I don't like. I don't like to see that. I would prefer that we take those out and then go down short. We'd check out these lows now. So I would just like to see confirmation of it moving away from this even more before trying to really get in there to take anything here. So just jumping in, taking that does have a breaker block. Let's change the color of this breaker block. Orange. It does have that breaker block, but that would be a very risky trade. The possibility of you taking a stop, you have really got breaker block, 5-minute inversion. So the stop is gonna have to be above that breaker there or above this fair value gap here. This would be a riskier position to take. And let's just go for the casual 5 handles. 5 handles is good practice. That's why I preach the 5 handles. It's a good practice. See, this is why I would wait. Let me make this. Sorry about the color. Let me make that green. That was probably a bit hard, difficult to see that 5-minute inversion. Make that a different color. It's more visible to the eye. We have this fair value gap. We traded into that. Now, since we're sitting above this 5-minute inversion, I would not execute in this for a short. I would want to wait for price, like I said, wait for it to get below this low. Really, really show me that it wants to get below all this. That it's not just going to continue pushing up prior to this relative equal high. It really has to prove to me that it wants to go down lower here. I don't want to be forcing a short idea on this and not have it trade down lower and keep on pushing higher. So this position here would be very, very risky to take. Wouldn't be something that I would advise you to take, even though we have a breaker block. I just wouldn't take it unless we have a solid close below here. I would rather get involved with something down here, a second leg to go for the lows. Have it prove to me that it wants to go down lower. That is what I would like to see. We could still leave that position on there. See if it wants to grab the stop of it. If it wants to take the stop. The entry was, geez, I don't remember. Somewhere here. Stop would be there. Let me just go back. Let's go back. There it is. Let's, for the sake of tape reading that, let's keep that on there. There's that fair value gap range. So we're looking at 12%. So see how you would have had to sit through this move up, sitting drawdown. It could still trade up into the stop because we don't have any solid close below this inversion. With price really showing us that it does want to keep on rallying now lower here. Dollar is pushing higher. US 500 is pushing along with NAS. US 30 is pushing along here with us. Slight fair value gap in here. Slight fair value gap. That'd be something you would note. It'd be difficult to take note of that. I want to see a trade below that. Trade below that. See, so it's like you can give us that five handles. I would just bank it right there. Bam, five handles, 12%. Just bank it. Take a partial. Take a partial, and I would snap the stop. Snap the stop into a profit. Even if it would take you out, just snap it into profits. It could still want to go back into the low of this inversion, take you out. It just having booking that five handles, in my opinion, it just would not be there would be no benefit of having that stop left open with another contract on there and then just giving that profit back. That is the exact thing that you do not want to do. It did reject there though. It is still high resistance liquidity run. Not clean. You would have had the option to, if I can get it, if I can grab this, which I'm not sure I'm gonna be able to grab that. You would have had the option to place that at the high and go for 10 handles as well. Just would not recommend that for the beginner. Well, that will be something that you would be able to do. Reduce it to the high. See if it wants to give you 10. And then be sure to pay yourself something. Just different ways of looking at the stuff. You're either going to be aggressive, most likely you are going to be aggressive as a new trader starting out. You're going to grab five handles and you're probably going to be done. You're going to close it there. Just take that home and be done. As you get more advanced, you're going to go, you're probably going to look at then going for five handles and having a runner on, but then moving the stop to break even, seeing if it wants to give you the 10. For below low, we still have this low here. Now relative equal lows here. Still have this 15-minute old low down here, as well as these equal lows. Still have the high in place as well. Just low probability conditions. Not high probability. Let's see if it wants to reach below this low. At this point of 10 handles, I would definitely pull the stop to even. Have your fees and commissions covered. See if it wants to go for that low. Dollar is rallying now lower now though. Might give us some high resistance liquidity runs. 1030. Get rid of some of these levels. 15 order block. We could extend that over. Get rid of that. 5-minute order block. You can just get rid of that. Equal lows. Get rid of those. Also have this order block here with fair value gap there. Focus would be on this order block over here. It's gonna look super messy, right? There you go. Focus would be on that, and you would be targeting this low. Remember that stop would be at even. You should be tape reading it. Looking at how it trades, not looking good for that order block. Trading back inside the, reaching for that inversion. And that's because dollar is now tanking. We're seeing that high resistance liquidity run. Main threshold, look at this order block here. Look to see if that wants to be respected. So now we would have lost this order block here, as well as this fair value gap. So this would be the last stance. If you still had that stop way up there, that would be the last stance. It would just close it if it goes above this. Just get rid of this. See if we can get that low. Make it a bit cleaner. Not looking good so far though. With dollar tanking. Not what I would want to see. Just cycle through. Let's show you guys the dollar. Dollar index. Came down to these lows. Let's switch over to the US 500. Let's go to US 30. US 30 reached up through its wick, consequent encroachment, put it back down here. Really high resistance liquidity run. And then we have the US 500. Ended up filling its daily gap. Cleared the 15-minute old high. Notice how price hung around the high of this daily gap. And it tanked down. Equal low here. Old low there. Back into this 15-minute inversion. Just things to take note of, be mindful of. Let's get back to the US 100. Still trading up higher though. Sitting inside of this 5-minute inversion. Didn't close below this consequent encroachment as well as below that order block. We did trade the main threshold of this order block. See if we can get these lows Nice reaction there. See if it can get the low here or below this low. And then we're going to close this one. End it here for the day. 15-minute order block, which was, by the way, it'll be these two candles here, acting as they are acting as a resistance. I want to see this get traded right through, push below that. Don't want to see it acting as a resistance. See if we can get below this low, below this order block, below this order block. That'd be really close to the low, close to this low here. Look to see if we can get it close below that. We are going into the 1037 equal low. See if we can go down lower now. Tapped into this wick. There we go. That'll be the low. Want to see if it can close below this 15-minute order block here. Close below this order block. Dollar is still pushing down lower, so that does make this a high resistance run here. No rejection so far on that inversion. Consequent encroachment. This would be where you would put a time stop in. If it doesn't show signs that it wants to trade down lower in 2 minutes, then you would just exit that position. Again, this would be another order block here. Not going to draw that because it coincides with this 15 order block. Look at how we rejected that. I still want to see it push lower though, close below this. We did reject this. Want to see a solid candle close below this inversion. This over here would act as another inversion. We extend that through. If not, you trade it through that. I want to see a trade through that as well. So this would be something else that I would have in mind, wanting to see it close below this. I don't want to really see it reject like that. Want to see it go below that. See if it wants to go down lower. Then this would be a valid order block here. We can get that. There we go. So that would now be a valid order block. So that would kill the time stop. Time stop would now be taken away because we did trade below that low, and going below this low again, we did go back above again. So I would just grab another partial here. Just pay yourself for sitting through this back and forth movement here. Even though you wanted to see this low, just pay yourself something here. Partials always pay. Want to see it stay below this order block. It's not showing a willingness to do so at all. Sitting in a range here, sitting inside 5-minute order blocks. At this point, I would just close this thing. Just close it. We are back inside of this variable you got. An inversion would have been inverted. See if it wants to reject that. Push down lower. Dollar is still rallying down lower. giving us high resistance liquidity run position conditions here. We still have these relative equal lows here in play. This might only come to fruition at the 950. Might only push down at 950. We trade into this inversion that reject that. See if we can get a push down lower now. Not looking good so far here. We are inside the order block as well. Get rid of that 15-minute order block. We're sitting inside the daily gap, sitting inside consequent encroachment. Okay, we have a rejection. See if we can push down lower here, get below this low. Wants to go down, it should go down now. We're just tagging this consequent encroachment as well here. So that is not looking good. I would collapse this. So I'm just gonna call it. Would just collapse that if I was in that. You're sitting inside this daily 50, this consequent encroachment of this gap, and we're sitting sideways in a consolidation. So it's just not worth the mental capital to sit through this. It's most likely gonna go up, hit your stop. We still have equal highs. We still have equal lows below us, so it's low probability. Low probability here. No high probability this morning. Sometimes it's just not worth the mental capital to sit through this when you could just come back on a day when you have high probability conditions and then just take a position in that, and it's just bam, it goes to your take profit. Quick, fast, easy, doesn't drain your mental capital. But these are great conditions to be tape reading in. That's how you learn how to anticipate all this high resistance liquidity run conditions. So we lost this inversion. We lost the order block. So 5-minute inversion is last stand for losing 3 PD arrays. At least on the move lower. Any close above this inversion still means that we could be reaching up for this high here. So no rejection yet. Back inside of that order block. No rejection. Pushing up higher. So we're gonna close this one off here for today. Hopefully you have learned something. And until I see you in the next one, good luck and be safe.